Hey, good morning, everyone. Welcome to the Macro Snapshot. We are Wednesday, February the 18th, 2026. Okay, so we're waking up to a little bit of sort of mild risk on, I would say. Not a huge amount of risk on, but mild positivity. Today we have a little bit of data. We have durable goods, and we also have the FOMC minutes. So in terms of the FOMC minutes, we know that last time they didn't cut or hike, obviously, anything like that. Currently, we have about 60 basis points. I think technically it's about 59 basis points of cuts priced into the cycle for this year for 2026. So that's about two and a half cuts. Is that too dovish? Maybe a little bit. Excuse me. And we'll see with some of the data, because some of the data has been relatively good. Apart from the retail sales, which was a bit soft, I think last week, the employment data has been quite good. And we're going to get an update this morning. We're going to get durable goods, which is expected to come in relatively strong. So we'll see how that holds up at 8:30. We also get the FOMC minutes, as I just mentioned, at uh, at 2 p.m. And the FOMC minutes are probably going to show that the committee was relatively sort of unanimous in essentially saying, hey, we've cut enough for the moment. The economy is doing okay. There's still a bit of sticky inflation. So that's going to be expected. What would be unexpected would be maybe more internal division, showing that quite a few committee members did want to actually cut, or even some people wanted to hike. I mean, that would be unusual. Anyway, so let's keep an eye out at 2 p.m. for the FOMC minutes and see if that's more hawkish. Who knows, maybe that 59 basis points of cuts priced in this year could go down closer just to the two cuts, which would be 50 basis points. The other thing as well, so let's have a quick look at the volatility. So here what I've got is the volatility curve here, which is between February and March futures contracts. So as you can see here, that we did spike. This is a 30-minute chart, so it's not a daily chart, but you can see that if we go to yesterday, for example, you can see that we actually had a little bit of a spike, and it went into a slightly sort of backwardated situation where the front contract is higher than the second contract. And keep in mind that, as I keep on saying, that for the VIX curve, generally for sort of benign or calm conditions, you want a curve which is actually in contango. So the front contract is lower than the further out contracts. And the idea here, very simplistically, is that if there's no sort of short-term sort of danger or risk or sort of fear, then those front contracts should be a bit lower. So you don't really want to be seeing these sort of spikes. And as you can see here, that yesterday morning, we do get some spikes, and you see that it was actually about 75 basis points higher. But subsequently throughout the day, you see that the shape of the curve, it actually flattened a little bit. And you can see that as we're trading now, sort of in the morning, just about 650 here, you can see that, that's sort of flattening out, which is a positive thing. And at the margin, slightly sort of positive in a certain sense for the equities. Keep in mind this February contract is actually expiring today, and the front contract will become March. If we actually just then look here at the bottom left on the VIX itself, you can see that too on the 30-minute chart actually was up at over 22 yesterday, which is a bit nasty, but it subsequently sort of calmed down a little bit. And I repeat, though, not coming down to sort of super low levels. We're certainly not at 13 or 14 or 15 in the VIX. We're here almost at 20 again. We're almost up at 19.88, literally as we speak here. So there is still definitely volatility. There are still nerves in the market. And therefore, with the reading of almost 20, and we do have the VIXpiration today, it wouldn't surprise me if we do get, some fairly choppy price action as we had yesterday. Remember, yesterday we had a sort of a fairly negative open, and then, the markets climbed back and recovered somewhat into the afternoon. Now, just looking overall at what's going on, if we just look at the equities, again, it's a similar kind of situation. As I say, a bit of positivity this morning. You see the ES up 42 basis points, NASDAQ 52 basis points, and the Russell just up to 12. So is this a little bit of rotation now going back into the tech stocks and away from the what we've seen before? So you can see here, we are seeing the ES pretty choppy price action, but basically bouncing here more or less off the sort of the 100-day moving average or local lows. I mean, no particularly obvious sort of reason for that, but just bouncing a little bit higher. We see NASDAQ, though, did bounce very clearly off its 200-day EMA yesterday. So that looks for the moment like the line in the sand. And we signaled that that's also relatively close to this horizontal support at about 24,300 and the 200 EMA. So keep an eye for future reference on that level, because that's where the market has said, okay, enough of this sell-off. off here. If we look over at the Russell, that continues to be, just grinding sideways, but relatively positive. So again, if we zoom out here, we get exactly the same situation that the indices are showing a little bit of sort of, essentially just trading more or less near their highs, maybe a percent and a half off their highs. But underneath, we're getting all that rotation, and we're not really finding the energy to push to new all-time highs. And generally what we've been seeing is, as you can see, equal weights doing quite well. So the equal weight doing sort of pretty well. We're seeing the Mag 7s as having a little bit of recovery, but basically being pretty soft. So they will need to really fully recover, or at least to sort of push much higher here, bouncing off the 200-day EMA. The Mag 7s will have to push much higher if they're going to retain leadership, as I said yesterday, to push the overall indices higher. Now, so the question really is, are we still getting this outperformance of semiconductors? Yes, we are looking good. Today, you can see pre-market up to 411 on the SMH here. So semiconductors are continuing to do very well. So the question is, with this sort of mini recovery yesterday afternoon and sort of overnight, how is the software going? And you can see here that, pretty disappointing price action. Yesterday we had, Friday we had a little bit of a bounce, but, basically then over sort of Monday, Tuesday. Monday was a holiday, of course, but let's say yesterday, the price action is not great. Today, up to 81.29, still pretty weak. So overall, we're still seeing, weakness in the sort of software compared to the semiconductors, and we're still seeing that the Mag 7 is not doing great compared to sort of equal weight, and even sort of things like growth is underperforming value. If you look at the growth stocks, they're underperforming value at the moment. So those sort of subcomponents, so to speak, are still what is happening. And you can see here, the reason for that was just looking, there's the Bank of American fund managers survey, which is actually pretty good because it gives you a sense of what people are thinking. And generally what fund managers are thinking, and these are asset allocators. So you're talking, the reason this is important because this is where the big money flows are going. You can see here that if fund managers who are thinking no landing, so basically no recession, a strong economy, it's actually pretty positive. So the vibe is fairly positive on the US economy. And you see those who sort of are forecasting or predicting a hard landing, so some kind of recession, it's actually sort of at relatively low levels. So in general, fund managers are saying, hey, we quite like stocks, we quite like the economy, at least in the moment. But what we don't like, and this is the interesting one, is the overexpending. There's too much capital expenditure. These hyperscalers are starting to be perceived as spending too much. So also in the global fund manager survey, you can see here that the net percentage of companies saying that a net percentage of fund managers saying that companies are overspending. They're spending too much on the AI build out and capital expenditure. You see how this is ripping much higher. So this is going some way to explaining just the pullback and this rotation. So it's almost as though fund managers are saying, hey, the economy seems to be okay. We want to have an allocation of stocks, but we certainly don't want to be over allocated and overweight in these sort of hyperscalers. So let's rotate a little bit. And you're seeing that with the sentiment here. And also what you're seeing is that there's a sort of a rotation, a little bit of well, I'm not going to say rotation, a diversification, a little bit of money coming out of the US, going a little bit into the EM, going a little bit into Europe, going quite a lot into Japan, but not so much in China. And it's kind of interesting if you look at the Chinese situation. I came across this chart this morning doing my research, which I'm just going to pull up quickly. It's quite interesting. Really, we have to understand the housing market in China. This is for 70 cities home price from Bloomberg, percentage month and month. And if we go all the way, so we have new homes and in the blue, and the second-hand homes, or sort of already built homes in the red. And what you can see is that clearly going back, let's say to this goes back to August of 2021. Basically, almost every single month, with the exception of a little bit in the middle of May, almost every single month, both new homes and already existing homes have gone down in value. You look at this, 20 basis points, 60 basis points, 1%, every single month, the housing price. So the question here, this is like a structural problem in China. Most Chinese wealth for households has been put into investment properties. I'm not even talking about people's principal residence. And if you see this kind of sort of negative price action month over month over month, this is going to lead to pessimism. It's going to lead to less spending. Uh, and just sort of a lack of consumption. And also, I would say, on a bit of a side point, if it, traditionally in the last sort of 15 to 20 years, any extra, a lot of sort of extra household wealth has gone into investment properties and the real estate market, which had a bit of a boom, as you probably know, in the early part of the 21st century. But with this kind of horrible price action in the real estate market here, the money is not being put into the real estate market and is maybe going to things like gold. Remember how the Chinese demand for gold is very, very strong. And this gives you a sense of, people say, hey, we can't really invest in crypto easily. The housing market is horrible. Our stock market has been relatively depressed. Maybe we'll put a bit of money on gold into gold. So just keep an eye on these kind of charts because gold will continue to have a sort of a structural bid, in my humble opinion, from China, especially if the real estate market just continues to be horrible. And keep in mind that in terms of the overall Chinese economy, until and unless this situation starts to appreciate, I just don't see Chinese internal consumption really improving dramatically. So that's kind of an interesting one to be looking out for. Okay, so enough of that, but let's just get back onto some other sort of markets here. So as I say, for equities, no particular sort of massive earnings today, but we can still see that what's been going on is more or less the same. Have a quick look over at global equity. We can see over in Europe, you see here, you see the outperformance here. So you see Europe, the Euro Stock 600, the broad index here, doing super, super well, new all-time highs. You see the blue chips, so the Euro Stoxx 50, which is like essentially a basket of 5 or 10 companies from the major economies, the really mega caps here over in Europe, doing very, very well. If we look at Germany, the DAX, a nice green candle. So, Europe doing well. And again, it's this whole flow that, infrastructure spending, defense spending, Europe in general starting to sort of to flow positively. If we have a look over at Japan, a little bit of green. So that's also positive. Doesn't look like too much of a sell-off. Again, I always like to look at Brazil just in terms of the commodities-based economy there. Now, Brazil, I have to say, is very, very oversold. You look at this market, sorry, overbought. You look at this market, everything ripping high. It would not surprise me at all to see any kind of consolidation. If what we saw in the last couple of days is the only consolidation, that is well, it means that this market wants to sort of rip a little bit higher. But as I say, it's difficult. The risk reward at this point is starting to become fairly unattractive. So if you haven't entered already, I'd say you want at least a pullback, maybe to 180,000 or something like that. We just had a quick look over again in China. So you see here in China, it's a little bit more like the US situation, like it's okay, more or less, not too much off the highs, but sort of relatively not really sort of booming. That's the Shanghai 300. And if you look at the A50, you can see that that's actually of the mega caps pretty weak. So China, and again, just keep in mind that sort of housing market chart we looked at is sort of underperforming sort of is Asia in general. And again, talking about Asia, if we look at the Kospi, kaboom, looks like a new all-time high, a new high. And again, the Kospi very much a semiconductor story, memory disks. Kind of story. So, that's almost like a proxy. This is one to keep an eye out for. So if you want to sort of see when, maybe the semiconductors is really going to start coming off the boil, you'll see some kind of pullback and reversal in the Kospi because it continues to rip higher over there in Korea. So, Asian equity in general doing well. China definitely the underperformer there. Europe doing very well. Commodities, EM doing pretty well. US doing okay with the rotation. That's essentially what we're getting in a global equity at the moment. Apart from that, it wasn't a huge amount of sort of movement yesterday, really in the bond market here. Coming off a bit of risk on this morning, as I say. So the bonds just taking a little bit of a breather, but I don't know that that's really as a sort of hugely significant, these moves. As I have said, at the long end of the curve, if I'm looking at the ZB, I'm trying to hopefully get a price up here that may be overly ambitious, up at 118 and a half or 119, something like that. But this has had a pretty good run, and I just think if you continue to get strong data and a relatively strong economy, at a certain point, one would have to sort of imagine that these yields go up a little bit, or at least sort of the price comes down a little bit. And talking about the US economy, just saw this morning there was some information that the tax returns, which Trump has been sort of trumpeting, no pun intended, up on average about 11%. So it does seem that in the short term, a lot of American consumers may actually get more generous tax refunds than they have been used to over the last few years. That could be a short-term sort of stimulus for the economy in terms of consumption. Let's keep an eye out for that over the next week or two or three when people start to get their tax returns back. But that, is potentially a positive. And again, looking at the ZN here, you see that's coming off a little bit. So we're seeing a bit of positivity in global equity this morning. Bonds coming off a little bit. In terms of specific news overnight, we're going to look at a few currencies here. Let's just look at the currency kind of dashboard. I actually did a snapshot of this yesterday, so it's not from this morning, but actually yesterday, but still pretty much over date. This is really the trends for the last 2 or 3 weeks, actually last 5 weeks here, as they're saying here. So you can see in general, the US dollar had been sort of hit very negatively, but it's starting slowly to stabilize. It's still, relatively negative, but it's starting to sort of slow the negativity. China, quite strong. Japan, quite strong. But again, these are not strong trends as such. These are sort of fairly much sort of flat at the moment. Talking about the strong trend, you'd have to look at the Aussie dollar here, which remains strong. New Zealand is weakening a little bit. We'll get onto the New Zealand dollar in a second because we had the Reserve Bank of New Zealand decision overnight. What is interesting is to look at silver and gold here. And you can really see that if you look at sort of gold, massive sort of upward strength, in the 15s and 17s here. But as you can see, cooling off. And you can see on the extreme right here for silver, that massive strength, which we had 2 or 3 weeks ago, obviously is cooling off big time here. And in fact, a little bit sort of negative for silver. So that's that. Now, if we just look at a couple of currencies as well, I want to look at the New Zealand dollar. Overnight, the new head of the Reserve Bank of New Zealand, Anna Bremen, who used to be with the Swedish Riksbank here, they were basically a little, not going to say super dovish, but less hawkish than expected. I spoke about that yesterday, and you can see here the New Zealand dollar being sort of hit, relatively aggressively here, back to this sort of key level at about 60 cents or so, and that was basically because they said that the policy, and this is a quote, will remain accommodative for some time. They thought that, possibly the overnight cash rate, the OCR, which is essentially their overnight rate, may need to rise, so a hike, but much later in the year. They said, potentially towards the end of 2026, and they would need to see the economy, then you need to see more evidence of a strengthening economy and potentially more evidence of increasing inflation. So overall, the projections that were revised a little bit more sort of strongly, a little bit more hawkishly, but the general tone was like, whoa, we're still very much data dependent. We need more evidence of inflation, and the economy, the recovery from the economy is still relatively sort of fragile. And keep in mind that the Reserve Bank of New Zealand had just come off 4 cuts. So they've been pretty dovish. And I think that the new governor there, Anna Bremen, is essentially saying, hey, maybe we'll be hiking, but we're in no rush. We need to see more evidence of that. So the market was expecting something a little bit more hawkish, or the commentary and whatnot. So as you can see here, the New Zealand dollar just taking a little bit of a beating, a delicate beating, if that's not too much of an oxymoron, this morning. So the other thing, we got a bit of information. We had the pound. So the pound sterling here, as you can see, showing a little bit of weakness against the US dollar. Now, a lot of this, of course, also with the New Zealand dollar is, US dollar strength. So let's have a quick look at at just the dollar index to see where we are. And you can see here that the dollar not really showing a huge amount of strength, but sort of grinding. Let's say it's not grinding sideways and not weakening. It's sort of attempting a bit of a bounce. But as I like to say, this is a feeble bounce, not much happening. But just getting back to the pound, we had some fairly soft employment data yesterday, and this morning we had the inflation data. Some of that was a little bit soft, but services still a little bit high. But overall, generally softening sort of economic conditions. If you look back and look at the overall sort of the global situation, so to speak, in the UK, it does look as though inflation is starting to sort of flatline, maybe even soften a little bit. Unemployment rate is definitely going high. That's, I think, over 5% from memory, and some of the other metrics like GDP and whatnot are starting to sort of flatline a little bit. So it's starting to look as though the BOE might really, have to be sort of cutting, even relatively aggressively at some point, maybe in the second half of 2026. And you can see here just how the market is positioning that, just talking about the BOE and the pound and whatnot. And I've picked up a nice chart here. This is from Bloomberg and courtesy of Super Macro here. You can see here for the pound. So you see here the pound, which is in the blue here. You can see that's generally been relatively strong. I mean, it's come off over the last few days. But what I want to focus on here is the red, the red line, there's the word I'm looking for, the red line, which is essentially the spread. It's about the short-term interest rate. So we know that we have the SOFRs here, but in the UK, for those who don't know, it's called the SONIA here. And you have the December SONIA subtract, so the differential with the December SOFR rate in the US, which is so basically short-term interest rates for the UK and the US. And what we can see here is that essentially that's really in sort of favor of is showing a more dovish sort of rate of future implied policy in the UK here. You see how that's getting quite soft, and you can also see the differential. Normally these trade fairly in correlation, except for the middle of 25 here, but they're more or less normally fairly highly correlated. And what we can start to see here is a sort of a differentiation happening, a sort of a gap widening. And this basically would sort of probably indicate that really the pound seems to be a little bit overvalued, at least according to the market and the short-term interest rates. So just keep an eye on the pound. That could be sort of weakening a little bit more. Other thing, according to the fundamentals and the data. The other thing which is going to be interesting is the euro. We're getting some headlines overnight that Lagarde, who is meant to stay at the ECB, Christine Lagarde, until 2027. It looks as though she may sort of leave her post earlier. Hint, hint, surprise, surprise, before the French presidential elections. Now, of course, the European establishment hate the populists in France, people like Le Pen, and what's his name? Is it Bardel? The head of the sort of basically the sort of neo-fascist party. Well, I don't say neo-fascist. Let's call them the conservative right-wing party over there. And so already we had an early resignation of the Bank of France, Villeroy. The governor is like, oh, I've decided to retire earlier, and it looks as though Lagarde is going to do that. Now, why are both of them? Why are both of those people wanting to retire early before the French elections? Because clearly, what they are fearing is that Macron may lose that election, will probably lose that, or possibly lose that election, and they absolutely do not want a right-wing, extreme right-wing sort of president, a French president, to come in and appoint a new Bank of France governor and be sort of a powerful voice in the new ECB sort of president. So very interesting the way that the European elites and establishment, especially the French, are sort of banding together and say, hey, we'd prefer to fall on our own sword, resign earlier, rather than allowing the conservative right-wing parties to have any say in appointing a new head of the ECB and obviously at the Bank of France as well. So interesting kind of political thing. That's not a short-term thing. You could trade the euro, but it's something which I sort of got my attention. So apart from that, guys, just want to have a quick look at oil here. Oil having a positive sort of day overnight. But again, as I said, I've been saying this for a while, we're just trading between this range here, really trying to figure out between the fundamentals, which are sort of mixed and probably balanced, and the geopolitical situation in Iran. We got some positive comments yesterday from the Iranian foreign minister. But when you really look at the small print, it was really not so much we have an agreement. It was like we have an agreement about how to keep on talking. Okay. And there's also been comments from what was it, JD Vance, saying that, relatively positive conversation, but there's still a long way to go before an agreement. And then, of course, there was a report from Axios just coming in this morning, essentially saying that Trump is planning for an extended and a quite a serious war in Iran. And we know that the second aircraft carrier has just been dispatched to the Gulf. So the point is, I think the jury is still out. I don't know. I'm not in those talks. I don't know what President Trump is thinking. I don't know what the Iranians are thinking. I don't have privileged access to that. But my personal view is that there is definitely a non-negligible chance of a relatively serious military conflict over there. I think Trump has been emboldened by what happened with Maduro. I think he's been emboldened by the earlier sort of bombing raid on the nuclear facilities in Iran. When was that? A couple of months ago, 2 or 3 months ago. And so oil, you can see here. I don't know if it's on the Axios headlines about a protracted war or a serious war. Anyway, the point is that oil is has found a bit of a floor around about $62. Let's just put it that way. The other thing I just want to have a quick look at here is a sort of gold and silver. Now we know that the Chinese market for the New Year is on holiday basically for this week. So gold just sort of going sideways. I'm not going to say too much about this. To be honest, I think it still needs a bit of period of consolidation. Silver, the same thing, showing a bit weaker price action. And just to finish off with our dear old friend, actually copper also showing some fairly negative price action as well. It's getting down towards these sort of fib levels where it had bounced in the past. But again, China is on holiday, so no action there. And also, as I think I mentioned yesterday, inventories at the three principal global futures warehousing, where they warehouse all the physical stock, is very high levels here. So in the very short term, there's plenty of physical copper to go around. And I think copper here is taking a break. Although if it does get down to this level here, you see around about $5.50. I think that could be interesting to see some dip buys, maybe that sort of 100-day moving average, which would also coincide with the fib level here. Finally, Bitcoin just sort of grinds sideways, no particularly positive price action here. I mean, it's not collapsing, it's just sort of doing a bit of a sideways sort of grind. And maybe it's simply that, the bro element has sort of moved on to other things, and there's just not a lot of excitement. There's just like the narrative is fairly the bubble has been pricked just for the moment, and it's not that people are necessarily selling, they're simply just not buying. And maybe it's just a question that there needs to be a new narrative to pick up the price action here in BTC. Okay, I'll leave it there, guys. Have a great day, have a great trading day. As I say, durable goods this morning, FOMC minutes this afternoon, maybe some information coming out about the Iran situation. That'd be something to look at. So that's it. Have a great day. So that's the macro snapshot from the macro shop. Hope you enjoyed that, and I'll be back again tomorrow with the same thing. Thank you.